when we are starting our day trading routine, we're not starting with a 1 minute chart or a 5 minute chart or a 15. I'm starting with that daily. I'm looking at that daily directional bias, and there's no way that I'm not interested in looking at primarily the long side of the market. Okay, there'll be a couple things that we'll do. One would be count back the 10-day VWAP. So that's going to be at let's see here. So this is how we count the 10-day VWAP. So tomorrow is going to be the 27th. So that's 1. Today's the 26th. Today's actually going to be day 1 tomorrow. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 lands me on a Saturday. I'm not going to anchor it to a Saturday or a Sunday. I'll just go to that preceding Friday. So my 10-day rolling is sitting at, I'm going to update this right now for tomorrow. It's going to be sitting at the 16th. So as long as I've got a double green, as long as I don't have any patterns or issues with where price is in relation to the VWAPs, I'm going to have bullish bias. I'm going to have bullish bias in the NAS. I'm going to have bullish bias on the S&P. So that means I'll be primarily looking for long trades. What else? Well, crude's actually coming back to a point where I've been saying that, I know this looks a little odd, but the way that we took back that OPEC shenanigans, this is what I called last week. I called it a tie ball game. Crude's acting as if that OPEC sell-off on the 19th and the 20th really never happened. So it's sort of fair game to start being bullish in crude again. And you can see here we're duking it out with the first of the month anchored VWAP. And if we can get a little bit of support over 72, the directional bias is going to be absolutely much more crystal clear on the volume standpoint, if not on the structure, right? Structure is still neutral. But if I can get some clarity out of those VWAPs, we're really, really clear and good to go. In fact, I was bullish crude this morning for the comeback that it's staged so far. All right, so now that I know directionally the process, now let's talk about what the setups were. We had a really good little breach retreat today in crude. And let me show you something. Not only do we have the breach retreat, then we also had a V-score. So this morning, I was taking some heat down to this level, and I said, wait a minute, that was opportunity number 1. This is opportunity number 2, or at least I'm going to sit through that because this is not a downtrend. It's not a bearish signal. It's just a breach retreat that just kept going until I had a volume and Darvis confirmation. So that's a separate trade. And in many ways, it's there to remind me, hey, if you're in that pullback in this area, just give it a minute. Be patient. We just triggered a second separate buy. And the idea was to scale out around 72.10 to 72.20 or even the 72 handle. And look how long it took. I don't care how long it takes. Boredom is never a reason to get out of a market. And then that target was finally hit. So initial trade in here, second trade in here, target in there. And we'll be looking for trades just like this tomorrow. And the NAS was far easier. The NAS was the other trade. In fact, it was the first trade of the morning. And frankly, this first one, I'm sure a few of you caught it. You saw this in here. That was very aggressive. It's super aggressive. I've had a bunch of people say, hey, is that a buy? So, well, it's really not a V-score low. I don't like a Darvis only level, but what was far clearer was our pullback after the breach into a point of control area and then a quick move to the upside. And so, look, the directional bias was bullish. Here's what's great. This is what that bullish directional bias prevents us from doing. And this is so important. That could have been a short for a lot of people. That could have been a short for a lot of people. These could have been tops that some folks might have wanted to sell, which I'm not saying are bad trades. All I'm saying is if you're open to two-way trading, you're just going to be in and out so much. You're just not going to be able to typically benefit from days where the market just sort of grinds higher, which is really, for me, the best kind of day trading day. And if you're in, out, in, out, in, out, you're just not wired to that type of, hey, we have directional bias, we bought, let's just surf this wave as far as we can, right? So that was it. That was a quick little move. And then, we're pretty much done in terms of positioning ourselves. And then once we have the latitude to move to a break-even stop, now we can start asking ourselves how high is high. And for NAS, not much. For crude oil, not much either. But, here's the thing. You want to give yourself that chance that if the markets are going to have one of those days, right, that you've just put yourself in the kind of opportunity, put yourself in the kind of position to be able to take advantage of this if the market just keeps on going. We do get those moves, a handful of times a month. And those moves, if managed correctly, are the ones that add to your account and really soften the blow of those days where the follow-through isn't there and or we get stopped out. So important to keep that directional bias, trend trader's mentality, even when you're day trading. I don't abandon that when I shorten the time frame from a daily to a 5-minute. That trend trading psychology permeates everything that I do. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.